All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's off and rolling here this morning and climbing about 2%, about 70 points. And, most markets, we'd look at 70 points and go, wow, that's incredible. That's bulls in control, blah, blah, blah. That's just not the case with this market. 70 points puts it right back into the middle of yesterday's trading range. We saw a 70-point up candle yesterday. Just 1 minute we saw the market rally 70 points. So, 70 points in this environment simply isn't what 70 points are in another environment. But that said, several things to go take a look at. Let's start with the challenge. No new signals on the board right now, but we do have some crossovers starting to emerge here. On the bearish side, let me show you what they look like. Zero, which is what you'd expect on a day like today. Bullish side of upside crossovers. This list keeps growing as the morning ticks on, and it was empty to start about 20 minutes ago. We had 4 names on it. Now there are significantly more names on it: Apple, Alibaba, FXI, Gold, Netflix, Procter. And most of these things look the same. Let me show you kind of here. Vulcan Materials. Heavy sell, snapback, retracement type rally, right? Apple, similar. Heavy sell, retracement type rally here. Netflix is one that's a little different. This is one where we saw a 3-7 crossover the other day. We saw an upside yesterday. We saw a downside crossover. Today we're seeing an upside crossover. So far, the consolidation risk on those crossovers has been high. So I have not been able to, go after it or trade it. This morning it's still very high, so not a signal there. If we come into Alibaba, this is one that could be a little bit different here by the end of the day. I'd love to go trade some Alibaba. I'd love to get in some calls on it, but we'll see. This morning it's still relatively high consolidation risk here for it. But that one, Baba, is probably the closest of being a trigger. Things like GOLD, just not going to be a trigger. Yeah, it has an upside 3-7 crossover because it's dropping off this big sell day, but consolidation risk on it is quite high as it sits at the moment. So anyway, that's not surprising. That's to be expected given what we're seeing out there. I will be patient. I'll wait. I'll react to the next signals. We're not seeing a big move in the market vibe here today to suggest, hey, let's go buy some market calls. FXI could have a trigger here today. This one is really interesting. The FXI, this is the Chinese ETF, and it has an upside 3-7 crossover on it today. It could trigger for the challenge. And what's really interesting about the FXI is while the rest of the world made new lows, FXI didn't make new lows here last week. And, you say, well, okay, fine. What does that mean? Well, for the challenge algorithm, it just means there's a greater potential of getting an upside signal. But, it is something where I do want to see some improvement in the market vibe if I'm going to go trade an upside signal on one of these ETFs. If we look at, EW, which one was it? EWZ had an upside trigger right back here, a bullish trigger, but it was contrary to what we were seeing on the market vibe, so I wasn't willing to trade it. The only way I'm willing to trade one of these global ETFs is if it does confirm with the market vibe, and so we'll see. We'll see how that plays out as the day progresses. All right, so that's challenge. Still in all cash, 6,500 in cash, and waiting for the next signals. Now, two things I want to go take a look at here with you this morning. One is buying dividend names, which is something that has come up a few times. Now that we see a dip, what stocks are safe to buy? What about dividend names? That's a natural place for people to go and say, hey, let me go buy something with a high dividend. Maybe that's going to be a little safer. Weather some of the market storm that is out there. And then, so we'll go take a look at that. But, want to take a look here at this question that I get asked a lot. Do you trust this move? And it's always been a funny question with me, and it's one, if you remember the chat that we used to have up, during the day and everything. Almost every day I'd be asked that question. Do you trust this move? Hey, Micron's move, do you trust it? Well, yes, I trust every move in the market. Right? I trust them all. I trust that what I see is what happened. Yesterday we saw a 70-point candle. I trust that that's what happened. We saw it sell off and go to a, break down and break below the low. Yeah, I trust that we saw that selling action. Right now this morning we have seen a sell-off from 30.71 down to 30.31. So we've had a 40-point sell-off and we've had a 40-point rally. I trust both of those. Right? I trust what I see. That's what we can, handle and deal with. And I know that's not what the underlying question is driving at. The underlying question is driving at, do you think there will be follow-through to this move? We just saw a rally. Do you think it will continue to rally? We just saw a sell-off. Do you think it'll continue to sell off? It's a predictive question, right? Do you trust this move is a, hey, predict what's going to happen next question. But when it comes to each and every move in the market or in a stock, we have to look at it not so much of, well, what's going to happen next, of more of what are the probabilities of what happens next. Because we could see unlimited different things happen right now. The number of things that could happen, the permutations there are almost infinite. But we can look at a move. We can analyze it. We can break it down and say, all right, probabilities, what are those? And if the probabilities are higher, I want to go get into a trade. If they're lower, I tend to stay away from a trade. When it comes to what we're seeing in the market this morning and on this gap up, do I trust the move? Well, obviously we're looking at the probabilities of upside follow-through on this gap up. Well, yesterday talked about two things. Talked about the banks. If I'm going to trust an upside move, what do I want to see from the banks? I want to see the banks outperform. Are the banks outperforming today? No. They gapped up and sold off immediately. JP Morgan, Bank of America, the XLF, which is slightly green here, but it opened, sold off immediately. Even Goldman Sachs, which is green on the day, has seen more selling. Morgan Stanley has seen more selling. So we are not seeing the banks lead. And I mentioned yesterday, for me, that's one of the things I want to see. I want to see some leadership out of the banks before I look and say, okay, the probability the bottom is in is pretty high. And then I want to see stocks like a Starbucks outperform. Are we seeing Starbucks outperform this morning? No, not at all. Not even close. Not even close. We have a market that's up 2%, a little over 2%. Starbucks is up 0.7%. So we don't see some of those things that I want to see outperforming. Are we seeing the metric shift, the overall market vibe shift? We are not. In fact, the bullish percent index is slightly lower here today. And so what does that all kind of tell me? It's not a matter of trusting the move. I know the move we could see further upside. We could see further downside. We could see a 100-point rally today followed by a 200-point decline. There are infinite possibilities of what could happen. But is it something where I look and I say it's a high probability that we continue to rally from this point? No, it simply isn't. When we look at things across the board, it simply is not one of those situations. And so I'm not willing to go out and put major money into play and go chase something and say, this stock's up big, let me go chase it. UNH, a little different story here today. It gaps on up, and we see it's going to add 180 points to the Dow. Can you go chase it? No, this isn't a chaser's market. And so, when I look at probabilities and I look at a move, are we going to see continued upside? Are we going to see continued downside? Is the excuse me. All right, my apologies. Voice just yeah. Anyway, I but are we going to see the probabilities higher or lower of a certain move, up or down? And the reality, when we're in a lot of chop, when we're in a lot of dancing here in the market, sometimes those probabilities, just simply, yeah, we see a big move to the upside, but do you trust it means what? Are we going to go higher? Well, you look into some of the metrics, and right now I just can't say high probability of moving higher. When we look and we look at the key market vibe changes that happen, like right back here after these 2 days here, January, February, market vibe turns bullish. What does that mean? Higher probability moving higher with lower volatility. And then right here, we saw the market vibe turn bearish. What does that mean? Higher probability of moving lower with a lot of volatility. So far we have not seen the metric shift, and I know we've seen a big drop and a big pop, and yesterday a drop and today a pop, but these are normal in bearish market vibe conditions. When right back here in August when the market vibe was bearish, look at the pops and the drops and the pops and the drops, and I know the magnitude is bigger right now, but it is very normal to see these. So do I trust a move? Basically that's saying, all right, do I expect a V-shaped recovery? And the answer is no. Because a V shaped recovery, which is something that looks like this most of the time, you get a drop and then you get an immediate pop. Right? That's a V shaped recovery. The reality is we don't get many of those. V shaped recoveries are very rare in the market when the depth of the selling has been what we see. Yeah, we get a little V-shaped recovery right back here in January, February, sure. Right? Right back here in October, sure. But these are shallow pullbacks. These are very shallow pullbacks. That's a totally different topic, totally different conversation. More major pullbacks tend not to see a V-shaped recovery. And in fact, we have to kind of go back to 2014 to see the last real big V-shaped recovery that happened in the market. Most of the time, there's a process of bottoming and retesting and breaking up and breaking back down before going on higher. So when I look and say, well, what's the ultimate probability here? V shape is low. Yes, I know it could happen. And I know that people are worried about it. People who are out of the market and want in are worried that there's going to be a V shape and going, oh man, do I need to get in? A lot of that kind of mentality there. And to be, that's, I totally respect it. I understand it. I get it. I feel some of it is well when I just kind of look at the pure, price action. But do you trust a move? Really just comes down to, all right, what's the probabilities telling you? And so, yeah, we see what the moves are. We know this is in kind of normal parameters here, and nothing that I look at and say, oh, okay, this is different. This is something where we're seeing some major change. Right now, that's not what we're seeing. Okay, that's not what we're seeing here. All right. Now buying dividend names. Whenever the market goes through, something like this, what do you buy? What do you buy? What do you buy? And we've talked about some of the stuff on my watch list that I'm looking to pick up, that I'm looking to buy. I have not bought big. I have not bought a heck of a whole lot. The only thing that I've bought additional that I'm still holding is Verizon. And this was I started a new position here on Friday, and I'm still holding it and plan to continue to hold it here. And it brought a question in that had to do with dividend. Did I buy Verizon because of the dividend? Is it time to start buying high dividend names? And it's a very valid question. And bottom line, look, I didn't buy Verizon because I think, the dividend is going to keep it safe. The dividend is going to, save it from more carnage or anything like that. It's not. The dividend simply is not high enough here for it, or at a historical level to where I can say, man, I can go buy this and feel super comfortable. I'm not. I just absolutely am not. The dividend doesn't give me that reassurance. But are there other stocks in the market where maybe we could get that? Well, let's go take a look. Let's do a little screen here. And I'm going to come into Finviz, free site, and just do a little screen. Let's come here to the screener, and let's come here to the index. Let's just take a look at the S&P 500. Okay? And let's come down to dividend yield, and let's look at dividends that are over 5%. We have almost 50 stocks, 49. Means we have 10% of the S&P that has more than a 5% dividend yield. That's pretty big. Okay. Let's go take a look at which stocks these are. I'm going to click on financial, and then I'm going to click on dividend to sort these out. And it's going to sort these out. Let's start on the bottom. UNM. Okay. UNM is a health insurance group, 5% dividend. Well, has this stock been saved by the dividend? No, it hasn't. Principal, another life insurance, been saved by the dividend? Nope. This life insurance group, they've been hit pretty hard. The regional banks, they've been hit pretty hard. Centerpoint Energy, this is a utility company. It's been hit pretty hard. Ooh, IBM, interesting. 5% dividend for IBM. Wells Fargo, okay, 5% dividend. It's been hit pretty hard. There are quite a few names on this list. Harley Davidson, Philip Morris. But if we now sort this from the high dividends, we have Macy's, we have Oxy, which is an oil company. We have Invesco, we have Ford. Right? These are some big names. These are some, commonly referred to names, commonly talked about names. But they're not being talked about for the right reasons. Macy's is going through just a big business contraction. Oxy is going through the same thing. Ford, they have some real issues that really started to come to light last year. Altria, it seems like every day I read, hey, another one of their products is being banned. Schlumberger, we're just not seeing oil gas projects upticking. A stock that just is in a lot of trouble. It could be a single-digit stock. These are your high dividend names. Kohl's, Gap. Businesses that are on the decline are where we're finding the highest of the dividends. Valero, Exxon, Ingersoll Rand. These are all businesses that are on strong decline that have these dividends. When I buy a dividend stock, I want something where the business is still strong. The stock is sold off due to some other reasoning, where I can then, I can pick this up, I can pick it up on the dip, and I have that dividend to give me a little comfort. Do I get that with Macy's? It's an 11% dividend, assuming it holds, but this is a stock that has had multiple days in the last couple months that's moved down 11%. Is an 11% dividend going to protect me? No, it simply is not. It is a stock that can go down 50, 60, 70% from here. I'm not going to buy it for a dividend. Oxy, same. Exxon, am I going to buy this for a dividend? 6.78. Well, let's see. Have they gotten down into this area before? 6.78. Here we go with Exxon. This is the last 10 years. This is the highest dividend that we have ever seen on Exxon, 6.78. If we come to Max chart to see if it's ever been this high, it has never been this high. Is that comforting? No, not at all. Not at all. I don't want historic highs. Yeah, if it's a stock that tends to go up to 4.5%, 5% dividend, that's where it tends to get bought up. But when a stock is in such free fall to where the dividend yield is not keeping it safe, investors are selling it even with the dividend yield. Dividend yield doesn't make me feel any comfort. Doesn't make me feel any eagerness to want to buy it. And that's a common theme with these higher dividend names. They're just businesses that are on a severe decline for the most part. Now, if we get into some of the 5% dividend area, an AT&T, for example, even a Prudential, okay, we can start making some interesting arguments for those that, hey, these are interesting stocks. But let's take a look at AT&T and their dividend. Is AT&T at a dividend level that's historically high? Well, AT&T historically can get up into this 6% area. And when we talked about AT&T last year, and last year being a really nice buy area for AT&T because it's fundamentally cheap and that dividend can keep you in a good spot for a long time, it was up over 6%. Well, yeah, the dividends increased over the last couple of weeks, but it's only 5.5%. It's not at that 6%, almost 7% area that we see when we can really say AT&T is bottomed. And that is the case for almost every one of these stocks that are, 5% on this list. So I can't look at this and go, let me go buy these stocks and the dividend's going to keep me safe. One on this list that I'm very bullish on longer term is IBM. I think is a really interesting buy point, for the stock. This is one that historically doesn't have a 5% dividend. And it's one where we have seen the numbers, we have seen the business model. That dividend is pretty safe. By most metrics, by most accounts, it's pretty safe. So can I buy it with a 5% dividend and feel a little bit of comfort? I can. It's one of the few where if you say, hey, Jeff, what are you going to buy based on dividend? IBM's one of those. And it's not that I'm buying it for the dividend. It's just one that I think, hey, we have a really good chance of seeing the business turn around in a way that we saw back in 2011 and 2012, or even back in 1996 and 1997, going back to those time periods. So for me, IBM, one of the only ones on this high dividend list that I would buy and say, hey, the dividend makes me feel better about it. Most of the rest of these, dividend doesn't make me feel better at all. In fact, in a lot of these cases, the dividend yield scares me. Altria, 8% dividend yield. Oof, something's wrong. Exxon, 6.78 dividend. Something's wrong. And that is when we look at the high dividend names out there. That's how I take them. Valero is one on the list. Valero here. This is one I'd love to be a buyer of. If I got a chance from a technical standpoint, but not something I'm really willing to invest in. And same with Carnival Cruise. And this is a stock I keep watching each and every day, looking for a sign that potentially it bottoms. But so far it hasn't. But I'm not buying it for a dividend. This is something where I look and go, okay, the stock's just had a huge haircut. Yeah, all right, is there going to be a bounce back? How do I play it? It's not one I'm looking at from a dividend standpoint because I'm looking at American Airlines the same way, but American Airlines doesn't have a dividend to get all excited about. So that's my take on dividend names out there in the market right now. I do not look at them as a safety area. Maybe some of the utilities and into that 3 and 4% area is a little more reasonable to look at. But the higher dividend names, pretty much outside of IBM, I don't want anything to do with them based on the dividend itself. Can you get a hold of Macy's and buy Macy's and try to bottom pick with Macy's and try to grab a 30% rally in Macy's? Yeah, you could, right? But you're buying it for stock appreciation, not for the dividend. Here on the stock. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.